Well, first-time homebuyers are certainly feeling the pain in today's housing market despite the recent softening that we've seen over the last several months. And this, of course, is a combination of higher interest rates and still elevated prices. It's putting these prospective first-time homebuyers in a serious bind. And if a picture is worth 1,000 words, these two images here have a lot to say. In my view, this is a tale of two generations. You have the baby boomers on this side. It's a young, happy couple, probably one household income. They are celebrating the purchase of their first home. And over here, you have the millennial age group, which I'm part of, and they are applying for a loan. They're talking to their mortgage broker. They look frustrated. They looked anxious, and they're probably sitting there wondering, why is this house going to cost so much on a monthly basis? How are we ever going to afford this? And because of the recent surge in mortgage rates where they've topped nearly 7%, we've seen mortgage application volume plummet, completely falling through the floor, hitting a 28-year low. We haven't seen these levels since 1995. And this is an indication that the housing market will continue to slow if mortgage rates remain elevated. Now, according to Bloomberg, the difficulty for first-time buyers has been escalating for years. Even during the pandemic boom, they were frequently squeezed out of the market because they were competing against people with cash and investors who were frequently targeting starter homes. Now, it goes on to say that the typical household income for first-time buyers soared to as much as $90,000 a year in 2022, and that's up from about $70,000 in 2019. But despite the rise in income, they were still struggling to get involved in the market. The fact is that according to the National Association of Realtors, first-time homebuyers face the least affordable market on record, and they started tracking this data back in 1986. So if you think about that for just a second, there were periods of time in the 80s where mortgage rates were double digits, where they were over 10%, and homes were still more affordable when you consider home prices, rates, and income. And one thing that I want to point out is that mortgage rates, historically speaking, if you were to just draw a line here, you would see that they are still historically low. The long-term average is probably more like 7.5% to 8%. And if we're taking that into consideration, something has got to give in order to make homes more affordable. So one of the biggest barriers to entry to get involved in the housing market is saving for the down payment. And according to Zillow, when mortgage rates hit 7% towards the end of 2022, they predicted that it would take around 10 years for an individual saving 5% of the median household income every month to set aside enough money for a 10% down payment on a typical home. And of course, the main problem with this is that the housing market isn't linear, neither are mortgage rates. So home prices go up, they go down, and so do mortgage rates. But if we continue this trend, it's gonna be harder and harder for the first-time homebuyer to save enough money to get involved in this market. And what's exacerbating the problem is that affordable homes are in such low supply. So your average starter home, let's say a 3-bed, 2-bath, 1,500 square feet, the inventory level are actually going down. So you see the average in the United States, it shows the bottom, the middle, and the top. On the lower level of housing prices, we're seeing a reduction in inventory, whereas the middle and top, the market is softening and inventory is increasing dramatically. And not to continue beating the same drum, but this has a lot to do with mortgage rates. According to this survey from Goldman Sachs, 99% of outstanding mortgages have interest rates below the primary mortgage market survey. In other words, the average rate today is around 7%, and 99% of all existing loans are below that level. And this is an indication that several homeowners purchased over the last few years when mortgage rates were dramatically lower, and or they refinanced to take advantage of those lower rates. And one of the biggest segments in the market is going to be your move-up buyer. Several people are putting off selling their homes and trading up into bigger properties because of where these higher mortgage rates lie. And the reason why that's important is because it's keeping the supply of these starter homes very low. What generally happens with a move-up buyer is there are two transactions. They sell their starter home and they move into a larger home. Bloomberg highlighted a really great story that I wanted to share briefly about this young couple who lived up in Seattle. They have a combined income of $200,000, and over the last few years, they were able to save up about 70 grand to put towards the down payment. Now, the mortgage rates absolutely impacted their purchasing power. They They were looking to purchase a home around $800,000, and it looks like they ended up buying a 2-bedroom house in a quaint neighborhood for $700,000. And what they said is that if we compared ourselves to our parents who bought in their late 20s, they felt like they were behind. So let's imagine that for just a second. You're a young couple, you're earning $200,000 a year, which is far above the median household income, and your first home purchase is $700,000. The monthly payment for that is likely between $4 and $5 grand a month when you consider taxes and insurance. Fortunately, this story is not uncommon. In fact, according to Freddie Mac, the share of young adults ages 25 to 34 had co-borrowers that were 55 years or older. And you could see that level is spiking up here going into 2023. Why would somebody need to add a co-borrower? There are, of course, a variety of reasons why this would take place, but one of the primary drivers is that the borrower cannot qualify for the purchase price that they want on their own. So they add, let's say, a family member or a friend who is older, who has a more established income and employment history that can help them qualify for the home purchase that they want, which is kind of an indication that they are, in some circumstances, stretching their monthly budget. Now, even though there are some major headwinds for the first-time homebuyer in today's market, I do want to end the video with a few things that we should consider. One is that we need to focus on reducing some of our largest expenses. Those are generally going to be housing, transportation, and food. If we can cut those down, then it'll allow us to save at a faster rate. The other thing we can do is focus on ways to increase income. So this might mean that we acquire new skills, get involved in sales, work overtime, maybe even start a side hustle. If we can do those two things, decrease expense, increase income, it's going to give us a big leg up on the savings, which will allow us to get involved in this market a lot faster. The other thing that we really should consider is that we need to let the market come to us. In other words, we need to buy when we are financially ready to purchase, not just jump in because we're afraid of missing out or we think that prices only go up. We don't want to overshoot the budget or stretch too far. So if this market doesn't make sense for your personal financial situation today, we need to wait it out, maybe let the market come to us. If we are going to buy in today's market, there is likely a little bit more risk than we've seen in prior years. It's really important that we buy with a long-term time horizon in mind, maybe 7 to 10 years. That way we can weather any market fluctuations that we see in the short term. And that is going to wrap it up for today's video. I hope that you found this information useful. If you are new to this channel and you like all things real estate, please consider liking, subscribing, and sharing the content. It really helps grow and promote the channel, and I would certainly appreciate it. Thank you so much. Have a wonderful day. Take care.